Hey everyone, good to see you again. I noticed that the last video I uploaded didn't have any sound, so we're going to refilm it for all of you out there. And in addition, we're going to have two prizes today for the people on my downline. Don't forget to comment on this video if you want a $10 giveaway this Thursday. Thank you very much. Alright, so let's start first with our prizes today. So we have our lovely little randomizer here. And so our first winner is going to be number 66. And then the next number will be number 3. So 66 and 3. For those of you watching, 3 is going to be 17JVP3, and 66 will be 1KJEVLZ. So those are the starting numbers of the keys for those addresses. And let's move on. Don't forget the $10 prize. You have to comment on my video and I will randomly choose a winner from there for the $10 prize. Thank you very much. Alright, and so today there we go. So this is my free Bitco account so far. We're approaching 20% of a Bitcoin, which is really good. Thank you all of you who are part of my downline. And we're going strong there with some daily income. Again, thank all of you. I recommend them the best, and I'm pretty much sponsoring myself with this site. So from there, let's move on to Bitcoin news. Unfortunately, my stream, my OBS won't show Chrome for some reason, so I may have to either reinstall it or find out what's going on with it. At first I was using my laptop, but we're switching to a different format. So as you can see, we're still, as far as the year curve, doing pretty well on Bitcoin here. Just going across, you can draw an invisible line going all the way down slowly until it kind of flattens out here. There's some news as for why it dropped this month, or this week. And we'll talk about that in a second. It dropped about $200 yesterday. And we'll start with that news because that's the new news. And then we'll go back in time and I'll redo some of the content I did earlier this week. That is not what we're doing. Okay. So the reason why the $200 drop happened is that about 900 Bitcoins were stolen from an exchange in Canada. And so let's go ahead and read the article real quick. Newsflash: Canadian Bitcoin exchange hacked. Says all funds are gone. A small Bitcoin exchange based in Alberta, Canada has gone offline before their Twitter page went offline. Maple Change had announced on Twitter that they had no more funds to pay anyone back. In the way of an explanation, the exchange had approximately 1 hour before deleting its Twitter page said that a bug had enabled some people to withdraw all of the funds on the exchange. Educated readers may recall a time when Mt. Gox claimed similar problems. The handling of the two cases by their administrators was dramatically different. In the case of Mt. Gox, attempts were made to repair the damage, although they resulted in worse damage. They went so far as to near nakedly manipulate the Bitcoin price in an attempt to recoup lost customer funds before anyone found out. The Maple Exchange Twitter account possessed less than 2,000 followers. By contrast, Coinbase has over 1 million followers on Twitter, and lesser-known altcoin exchange CSEX has nearly 100,000. In short, cryptonauts are generally highly active on Twitter, and the viewership on that platform is a semi-decent way to judge the popularity of a product or service in the space. This is the actual Twitter post. Due to a bug, some people have managed to withdraw all the funds from our exchange. We are in the process of a thorough investigation for this. We are extremely sorry that it has come to an end like this. Until the investigation is over, we cannot refund anything. It's been some time since we were able to report on a good old-fashioned exit scam. In this crypto space, we have primarily seen them in gambling, the dark web, and exchanges. The recipe is basic. Gather trust of some clientele, get all their funds in one place, and run off with the money. It doesn't actually matter the method by which you run off with the money, whether you claim a hack or simply up and disappear. The less frequent today practice is precisely where the old wisdom of keeping one's coins off exchanges and the like overnight comes from. You never know what's going to happen next. And in cryptocurrency, you don't have anything if you don't have your own private keys. It's just the nature of the thing. Unfortunately, the Maple Change hack has all the signs of an exit scam. For starters, there's no need for the exchange to delete its social media pages or completely disappear in quite the fashion it has. There's no question that it is in debt to a number of depositors, gratefully a likely small number, but in business such things happen, and that's what insurance or bankruptcy courts are for. The short span of time between the announcement of the bug and the total disappearance of the exchange or its operators is another signal. The domain itself registered at GoDaddy by one Flavius P. is suspect. Most professional operations go some lengths to be above board, especially those that handle other people's money. The time of the problems is another significant factor in guessing that this is not a hack or a bug at all, but rather an elaborate, premeditated scam. As you can see by MapleChanges.com recent traffic statistics, they were most probably doing more business over the last week than they had in recent times. If they are guilty of fraud, they struck early on a Sunday morning when they likely expected most clients to be sound asleep. This story will be updated as new information becomes available. Maple Change representatives are welcome to reach out to CCN with more information. I don't know anything about them. I don't live in Canada. My personal thing is that when Bitcoin is stolen, it lowers the price of Bitcoin. And if hackers manage to get enough of it, it would lower the price of Bitcoin. So I think that stealing Bitcoin is actually counterproductive in the long term. In the short term, who knows? But anyway. More exciting news about Bakkt along with Starbucks. Very exciting news coming up December 12th. Bakkt begins December 12th. Bakkt will begin trading Bitcoin daily futures contracts on December 12th. Bakkt has announced the date it will turn on the lights and begin utilizing the ICE Exchange family of networks to trade Bitcoin future contracts. The date is set as December 12, 2018. Bakkt is considered by many, including its well-heeled investors, Fortress Investment Group, Eagle 7, Galaxy Digital, Horizon Ventures, Alan Howard, Pantera Capital, Protocol Ventures, and Susquehanna International Group, LLP, as the flagship institutional organization pressing into the digital asset space. Tier 1 global investment banks are either in current discussions with Bakkt to use their familiar exchange architecture or are watching the launch very, very closely. A short reminder of what Bakkt is on the cusp of executing. Bakkt is designed to enable consumers and institutions to seamlessly buy, sell, store, and spend digital assets, formed with the purpose of bringing trust, efficiency, and commerce to digital assets. Bakkt seeks to develop open technology to connect existing market and merchant infrastructure to the blockchain. As an initial component of the Bakkt offering, Intercontinental Exchange's U.S.-based futures exchange and clearinghouse plan to launch a one-day physically delivered Bitcoin contract along with physical warehousing on December 12, 2018. After receiving the CFTC review and approval, these regulated venues will establish new protocols for managing the specific security and settlement requirements of digital currencies. In addition, the clearinghouse plans to create a separate guaranteed fund that will be funded by Bakkt. It all begins on December 12, 2018, and as the firm and exchange quickly spool up, their partners will become more and more visible. For example, Bakkt has partnered with Starbucks to produce payments via Bitcoin on the coffee company's mobile app. You may be interested in this fact. Starbucks occupies the largest mobile app payments ecosystem in the United States, bigger than Apple Pay, Google Pay, Samsung Pay, with 23.4 million users. And a quick reminder, quote, regarding the scale and aspirations of the Bakkt organization. In bringing regulated and connected infrastructure together with the institutional and consumer applications of digital assets, we aim to build confidence in the asset class on a global scale, consistent with our track record of bringing transparency and trust to previously unregulated markets, said Jeffrey C. Sprecher, founder, chairman, and CEO of Intercontinental Exchange. Bakkt begins less than 2 months from now. The digital asset space is about to change again. You know, this is super exciting. One thing I have to remind people about is Starbucks is so big. They're international. I've lived in Japan before. They're everywhere. And if you think about all the places where they're at, there's a Starbucks in your grocery store. There's a Starbucks in Target. There's a Starbucks down the street. There's a Starbucks in the mall. They're everywhere. Everybody's going to possibly see someone using Bitcoin or crypto to pay for Starbucks. That's huge. I think regardless of the futures contracts, the visibility along with the ATMs that are already in public, along with the debit cards, like the ones that I have, are going to be huge, and it's very exciting. Alright, here we go. DFS authorizes Coinbase Global Incorporated to form Coinbase Custodial Trust Company, LLC. Financial Services Superintendent Maria T. Volo today announced that the new New York State Department of Financial Services, DFS, has approved the application of Coinbase Custody Trust Company, a wholly owned subsidiary of Coinbase Global, to operate as a limited-purpose trust company. Coinbase has held many money transmitter and virtual currency licenses for DFS since January 2017. DFS has also approved Coinbase Trust to offer secure custody services for 6 of the largest virtual currencies: Bitcoin, Bitcoin Cash, Ethereum, Ethereum Classic, Ripple, and Litecoin. New York continues to be a leader in creating, fostering, and responsibly regulating financial services in the marketplace that promotes innovation, safeguards the industry, and protects consumers through strong supervision, said Superintendent Volo. Today's approval further demonstrates that the state regulatory system is the best arena in which to responsibly supervise the growing fintech industry with a sound and compliant framework. DFS has rapidly responded to innovations by licensing technology-based money transmitters under New York's money transmitter law, online lenders under New York's banking law, and virtual currency exchanges under New York's financial services law. To date, DFS has approved 11 charters or licenses for companies in the virtual currency marketplace. DFS issued a virtual currency and money transmitter license to Coinbase in January 2017 to offer services for buying, selling, sending, receiving, and storing virtual currency. Today, DFS authorized Coinbase Custody Trust to offer narrow services to operate as a custodian for virtual currencies, including Bitcoin, Bitcoin Cash, Ethereum, Ethereum Classic, Ripple, and Litecoin. Since 2014, the New York Department of Financial Services has proven itself to be a strong advocate in its support for the responsible growth of the cryptocurrency industry. The New York State Limited Purpose Trust Charter, which now enables Coinbase Custody to act as a qualified custodian for crypto assets, builds on our unparalleled success as a crypto custodian while holding the company to the same exacting fiduciary standards and oversight of other mature financial institutions operating in New York. We applaud the leadership Superintendent Volo has shown to guide the responsible growth of the cryptocurrency ecosystem and look forward to working with their offices in the future. Not bad. And lastly, something that's a little bit more ethereal to Bitcoin related. We'll see what happens should a crash happen. But JP Morgan predicts that the U.S. recession will, by 2020, have about a 60% chance of happening. $362 billion banking giant JP Morgan Chase has predicted a 60% chance for the next U.S. recession to occur by 2020 in a global market crash. Can crypto be a viable alternative to existing stores of value? The probability of a U.S. recession with 1 year is almost 28% and rises to more than 60% over the next 2 years. Researchers wrote in a note this week over the next 3 years, the odds are higher than 80%, according to Note, Bloomberg reported. Why experts predict a market crash? According to the Federal Reserve Bank of New York, there exists a mere 14.5% chance of a recession occurring by the end of 2019, which is a stark difference from that of JP Morgan's 60% chance by 2020. The difference comes from the intricate model of JP Morgan that tracks virtually every indicator that could contribute to the global economy. Some of the indicators include compensation growth, consumer business sentiment, and labor participation. Stephen Stanley, chief economist at Amherst Pierpont, suggested that 2020 could be considered as the premature period for the next U.S. recession to occur, but he echoed a similar sentiment to JP Morgan in that while the U.S. economy remains strong with low unemployment rate and a bull market, the risk of a recession in the years to come exists. Generally, the majority of economists in the U.S. forecast a recession to occur in the next 2 to 3 years. David Altig, Federal Reserve Bank of Atlanta Research Director, and NABE, a survey chair, disclosed that 2/3 of business economists in the U.S. expect the market to crash by the end of 2020, mostly due to trade issues. Trade issues are clearly influencing panelists' views, Altig said, stating that trade issues and high interest rates imposed by the Fed leave U.S. markets vulnerable to a mid-term crash. Is crypto an alternative? More pertinent to us. During a period in which many economists forecast a market crash and a major recession in the next 2 years, the demand for crypto has increased rapidly. While not portrayed by the prices of major cryptocurrencies, financial institutions such as Fidelity, Goldman Sachs, and Citigroup have established infrastructure to target institutional investors planning to invest in the digital asset market. Banks and investment firms have prevented from establishing businesses in the cryptocurrency sector due to a lack of regulatory certainty in the market. Experts have stated that the abrupt emergence emerging trend of major financial institutions entering the crypto market suggests the demand for crypto from investors in the traditional finance sector has increased rapidly in the past several months. As Jim Hamill, portfolio manager at Artisan Global Opportunities Fund, explained, the digital payments industry has experienced exponential growth in recent years, which could naturally lead investors to cryptocurrencies. There are a number of tailwinds contributing to this trend. First, we're seeing rapid growth in e-commerce, which requires that customers be able to secure digital payments, the growth in cross-border transactions, and the general impact of an increasingly globalized marketplace helping to accelerate this trend. So a lot of interesting things happening these past few weeks and in the coming months or so. The big issues is that, when it comes to security, guys, it's all up to us. Wise tips include only sending maybe $100 or a few $100s at a time of Bitcoin if you're going to send it anywhere. Don't keep your Bitcoin on exchanges. Even the investments that I have with Bitcoin, not all of it's in there. Maybe a large percentage, but not all of it. I still have plenty that's on cold storage. I don't have to worry about. And I mean, as far as the future, I think HODL for me is the way to go. Maybe not for you, but I'm really excited to see what happens to Bitcoin. Don't forget that we're having a giveaway every week. The next one's going to be this Thursday. So if you want to participate, please like and subscribe, leave a comment, and I'm going to choose a randomized comment for the $10. Thank you very much, everyone. See you next time.